Hey, what's up, everybody? It's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage, and I've been helping people buy and refinance their homes for over 25 years now. And last year, I realized that there's just way too much data out there, and it's really causing people to make some bad decisions. So I also realized there's really three types of people. There's those who just want to know what time it is. You guys aren't going to watch a 10 or 15-minute video. And there's some folks that they do want to know a little bit more. They kind of like to know how the clock works, and they might give me a few minutes of their time. And then there's people who have to understand how the clock is built, and you guys will stick around as long as it takes to figure out exactly what's going on. So last year, I started 1 Minute Monday, where each week I break down the mortgage and housing headlines, but in a way that works for you. But real quick, outside of all the headlines and noise, what do we actually do for you? Well, my team and I shop your loan application across multiple different banks and investors, and we structure it based on your unique situation. So you're not filling out a bunch of applications. You're not getting blown up by random lenders and their telemarketing team that you're never going to call back. And you're not guessing which loan option's actually best for you. Heck, if we start early enough, we're even going to help you optimize your loan application so when the time comes, you're actually positioned to get the best possible financing for your situation because one size definitely does not fit all. Now, we do the work on the front end so that you can make a confident decision on the back end. Now, let's go ahead and get into what's happening this week. And we're going to start for my friends that just want to know what time it is. Mortgage bonds, they're selling off pretty hard to start the week. They're down about 35 basis points, and that's putting real upward pressure on mortgage rates today. Stocks are mixed, and oil is elevated. It's holding above $100 a barrel. And that continues to be a major driver behind the scenes. Now, as far as the national average mortgage rates as of right now, and these things are pulled from the daily rate survey from Mortgage News Daily. And I've actually got a link down in the description for you so you can actually check them out anytime you'd like. The 30-year conventional fixed rate is around 6.52. The 15-year fixed rate is 6.04. FHA's 30-year fixed rate is around 5.99, and VA just went above 6% again on their 30-year fixed at 6.01. And just a quick reminder for everybody, these are national averages. These are not personalized rate quotes. Your personal rate's going to depend on a whole lot of different stuff, like your credit score, your equity, your debt ratio, whether or not you get tricked into paying a bunch of discount points, and so on. And we also got an alert to lock earlier today. Mortgage-backed securities, or MBS, and that's the bond market that directly drives mortgage rates. Well, it dropped pretty sharply. And the 10-year Treasury, which is the benchmark rate for the U.S. economy, that mortgage rates tend to follow pretty closely. That pushed up near 4.46. So if you're inside about 15 days from closing, this is one of those moments where you're going to be wanting to pay some pretty close attention to what's going on, or at least make sure that you're working with a certified mortgage advisor that's paying attention for you. Now, don't assume that because some lender has a mortgage license that it means that they're actually watching the bond market or even knows what it is. That assumption can cost you a lot more than you even realize. Now, this is a really big week for the labor market. We've got JOLTS on Tuesday, and that's basically job openings. We've got ADP on Wednesday, which gives us private payroll data. We've got jobless claims on Thursday. That's pretty much layoffs. And then the big one is the BLS jobs report on Friday. And that's the official government report that the market really truly does react to. So expect some volatility this week. The bottom line right now is that rates feel kind of stuck, but pressure's building, and this week could actually be the catalyst that breaks that range. Now, for my friends that just wanted to know what time it is, your work here is done, but hey, I hope you'll like and subscribe or share this with somebody else that you know before you go. And if you want to learn just a little bit more, feel free to stick around. Now, let's go ahead and talk about what's actually making this clock tick. The market right now, it's actually trying to solve multiple problems at the same time, and oil is definitely back in the driver's seat. Now, we've got the Strait of Hormuz blocked, we've got increased financial pressure on Iran, and we also have some real concerns around supply disruption. And remember, oil doesn't just affect your gas prices, it feeds directly into inflation expectations. We actually saw that last week with PCE. Now, PCE is personal consumption expenditures, and that's the Fed's preferred measure of inflation. It's moving higher, and it's largely because of energy costs. So when oil moves up, the bond market gets spooked and gets kind of nervous. And mortgage rates, well, they feel that pressure almost immediately. Now, here's where it gets a bit interesting. The market doesn't fully agree on what's going to happen next. Some believe that oil is going to drop pretty quickly once the conflict settles. Now, others say that the disruption that it hasn't even fully hit yet and that it could take more time to normalize. Now, that disagreement is exactly why you're seeing indecision and why mortgage rates feel like they're really stuck in that range. At the same time, housing is still quietly helping. Rent growth is modest, and renters are spending about 19% of their income on housing. And supply, it's down significantly from its peak. So while oil is pushing inflation up, housing is actually helping pull it back down. It just takes a little bit of time for that information to show up in the data. Now, inventory is improving, but it's not exploding. Listings are up, but the pace is slowing a little bit. So we're not dealing with an oversupply problem. What we really have right now is kind of a tug of war between inflation pressure from oil, cooling housing inflation, and uncertainty around the economy. Now, if you really want to know how to build a clock, mortgage rates don't follow headlines, they follow expectations. And right now, the bond market's asking, is inflation coming back? Is the labor market about to break? Is the economy slowing? And right now, there's just not a clear answer to any of those, which is why this week's jobs data matters so much. Now, expectations are around 60,000 jobs created, with unemployment ticking up to around 4.3%. If jobs weaken, rates could improve pretty darn quickly. Now, if jobs stay strong, rates are likely going to stay elevated or move higher. And mortgage bonds are trading between about 100.35 and 100.61. And the 10-year treasury, it's bouncing between 4.33 and 4.48. That's a pretty tight range with a lot of indecision. So we're starting to see some early signs of what's called a negative stochastic crossover. And basically, that sounds fancy, but it's just a momentum indicator. And that could point to lower rates, but it's not completely confirmed yet. So right now, the market's kind of coiled, waiting for a reason to move. And that reason, it's likely going to be jobs data. So here's the strategy I'm using with clients right now. If you're within 15 days of close buying a home, lean towards locking. Now, if you've got more time, we watch the data, we set a plan, and we stay ready to act. Because when this market moves, it's not going to send you a warning text. Heck, new data shows that about 70 to 80% of loan officers are purely transactional. And that means that they don't even talk about inflation or the market. Now, less than 5% actually send proactive lock alerts. So it's more important than ever to work with somebody who's actually watching mortgage backed securities daily, somebody who understands the bond market and can connect oil and jobs and inflation to mortgage rates so that you can build a strategy based on timing and volatility. All right, here's the big takeaway for the week. Rates aren't stuck because nothing's happening. They're stuck because too much is happening and it's happening all at the same time. Oil's pushing inflation higher, housing is kind of helping bring it down, and the labor market, it's literally the next decision point. And the bond market's waiting to react. So if you're thinking about buying, refinancing, or you're just trying to understand what this means for you, my job is to help you build a strategy through an honest, education based process that doesn't come with a student loan bill, and it's not just a guess. So, hey, if you found this information helpful, please like, subscribe, and share it with somebody else who needs it. And as always, if you're military, law enforcement, or a firefighter, or somebody who supports them, we'd love to serve you through the Home Foundation. Our mission is to help our heroes' homes be more affordable and to help shine a light on other nonprofits that serve them as well. I'm Doug Shoemaker with the Shoemaker Loan Team, and I'll see you next week on 1 Minute Monday.